Hi, everyone. Welcome to this week's edition of What's Driving Token Prices. I'm your host, Katie Talati, Director of Research at Arca. For those joining for the first time, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove those moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, well, it's been another action-packed week, not actually on the token front, definitely more so on the general news front. Genesis and DCG, there has been no more talk of bankruptcy, but they've hired Moelis & Company to help restructure them. BlockFi, the centralized lending and borrowing platform, did file for bankruptcy on Monday. Not a huge surprise there. And the FTX saga continues. Still seems that Sam Bankman-Fried has been all over the media, and we're, kind of just like waiting to see how the initial hearings, which I believe are slated for early December, pan out. What else is top of mind today? Yeah, I mean, those are kind of like the big moves, but in terms of tokens, we can get started this week talking about Serum. So I know I talked about Serum last week, actually, or 2 weeks ago. But I was going to kind of for those of you that missed it. So Serum is the decentralized finance project on Solana. They basically were like a built-in order book protocol. They were completely FTX backed. So during the FTX unwind, some of the developers for Serum decided that they should fork the code because the Serum code base was mostly controlled by FTX employees, and they were afraid it would be compromised. So that fork was already completed. It's called Open Serum. However, yesterday, the Serum project officially announced that it was going to be folding following the FTX downfall. They basically said that they thought the security was compromised, and then also the future just of the project was really under a lot of duress. They also said that apparently developers have decided to scrap the use of the native SRM token because of the potential exposure to Alameda and FTX. However, the project, like I said, it's not completely gone. It's supported the use of OpenBook, which is a fork of the project that is widely supported in the community. So long live OpenBook, and sorry to see Serum go. But I guess one of the first casualties in the tokens realm from the FTX fallout. So Serum was down 10% on the week on this news. All right. So AAVE, decentralized lend borrow protocol. So if you guys kind of missed last week, I didn't get a chance to cover it, but AAVE was kind of the victim of another hack. It was an exploit in the code. So the hacker, his name is Avi Eisenberg. He was the one who previously exploited Mango Markets, which is a Solana-based lending protocol. I covered that one, I think, a few episodes ago. But basically what he did is it's the same thing where you buy a token and it has low volume, and you kind of manipulate the price either up or down to increase or decrease your ability to borrow. So in this case, this hacker, he took advantage of AAVE by borrowing massive amounts of Curve, CRV token, and leaving the protocol with about $1.5 million of bad debt. So as a result, the community actually decided to act. They voted to freeze 17 assets in AAVE's lending market to prevent further bad debt from accruing to the protocol. So the frozen assets, those kind of include Curve, 1inch, Yearn Finance, and some others. And they said they'll become available after AAVE completes its V3 upgrade, which is expected soon. But in the meantime, they decided to freeze those kind of more liquid, lending pools. So the same kind of exploit couldn't be done. With this, AAVE is actually up 14% for the week, which is definitely an impressive rebound. All right, last up this week, I've got apecoin. So apecoin is the Yuga Labs token that is part of the Bored Ape Yacht Club metaverse ecosystem. So apecoin officially announced that their staking program would go live after doing a bug bounty. It's going to go live next week on December 5th. The staking program allows for holders of ape tokens and NFT collections, Bored Ape Yacht Club, Mutant Ape Yacht Club, and Bored Ape Kennel Club to participate. So the big pushback, however, or the big kind of upset within the community is that the US and Canadian users are actually going to be blocked from participating in staking via the actual website staking interface. So many have actually speculated this is in reaction to the SEC's probe into Yuga Labs, which was last month. So last month, the SEC said that they were investigating Yuga Labs potentially for their token sale and their NFT land sale. Nothing conclusive has come out yet. There have been no statements from either side, but a lot of people think that this is maybe just like a preemptive action to cover themselves. We obviously don't know for sure. There's other ways also that US users can get around the geofencing if they wish, in terms of interacting with the staking contracts directly on mainnet versus going through the website. But as a result, I think, ApeCoin has had a bit of a more subdued reaction. They were up initially like almost 30% on the news of staking, and right now they're only up 17% for the week. All right, that's all I got for you guys this week. Thanks for joining. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.